What's up, guys? Long time. Who knows how long? But it's been a while since I've been on a stream. So we'll get started in a minute. Appreciate your patience. Give me a quick sound check. When I went to start the stream, my microphone settings were changed. So I didn't make those changes, but something might have happened to my Streamlabs. So just give me a all good, all clear on the sound, and we'll be good to go. Great techno. Yeah, I don't listen. I pick something different every time I stream now, and it's I think the nonstop techno rave radio 24/7 mix is safe to play on YouTube. I don't think I'll get any copyright infringement. I don't know. We'll find out. Anyway, sound is good. Cool. All right. Welcome back to me. Hope you guys are doing well. I don't remember the last time I streamed. It was probably before my grandmother passed away. So I think maybe that's 2 weeks now. Maybe it was a week ago. I don't know. Before I had a daughter, before I became a dad, I couldn't tell you what I did 2 days ago. So now, as you can imagine, it's become a lot more difficult to recall things outside of today. Anyway, thanks for joining. Thank you for joining. Let me switch the screen and we'll get started. All right, cool. So real quick, because some of you have probably noticed, you could see at the bottom portion of the screen, it says partnered with TradeBybit.com. So I partnered with Bybit. For those of you that have been following me for 4 or 5 years now, probably going back 4 years, maybe 5 years. You might recall that I was one of the first people to start working with Bybit. I remain close with Ben for the last few years. I talk on and off. I was partnered with Phemex for most of that time. I still think Phemex is a phenomenal exchange, but I went to Bybit. I had my reasons. Again, it says nothing about Phemex. It's not like anything happened. So before anyone asks, oh, why did he leave Phemex? I just felt like it was the right thing for me to do to go with Bybit. Bybit offers a little bit more than what Phemex offers. Not to say that Phemex won't offer what Bybit offers, but Bybit offers options as well as futures and spot. And I think that it's difficult to get all of the products on one platform these days. For the longest time, Deribit was one of the only places that you could trade options. And then we had DeFi options, which weren't exactly the same as obviously Deribit's on-chain options or off-chain options. But Bybit has options as well now. They've had them, I think, for a few months at least. And I think that that's awesome that it's offered alongside what is second to probably Binance as far as being the most liquid exchange. So for those of you that are familiar with this, I've been trading on Bybit. Or maybe for those of you that weren't familiar, I've been trading on Bybit. I did majority of my Bitcoin trading on Bybit, trading ETH on Bybit. So it makes sense that I can access all of these things now on one exchange, and I think Bybit is a phenomenal exchange. So let's get this out of the way. I don't like to shill shit, but I'm partnered with Bybit. So yes, that means that I am an employee of Bybit. What else? What was I going to say? I'm forgetting my lines. They're not lines, but I think you understand what I'm saying. Okay. The bonus. So if you deposit $1,000, you get a 10% kickback. So you get $100 per $1,000 you deposit. Excuse me, not per, but for the first $1,000 you deposit. And if you deposit $500, you get $50. So what is that? That's not you just being able to log on to the exchange, make the deposit and then leave with 10%. I mean, imagine that. That would be, if you could create multiple accounts, bought that up, you'd make 10% on each one you did. That's not how it works. The bonus, same as every other exchange, is money that you can use towards your trading fees. All right. So this is not, I'm just going to use the ref link and then I'm going to, peace out with some free money. That's not how it works. You'd be surprised how many boneheads think that that is what it should be and that what it is. And anyone who has a brain realizes that that would never be the case. These exchanges would go out of business. All right, so before we get into it, none of this is financial advice, strictly for entertainment purposes only. If you're interested in any of the platforms that I look at, there should be a good assortment of links below. And if they're not below, because I haven't updated anything, then you could find every link for all of the platforms I use in the Discord. So the Discord is on my Twitter page. I promise I'll be done with the spiel in a second. It's on my Twitter page. I've created a resource channel. So it has, the answers to most of the questions that I receive. Hey, what do you, where do you get that data from? Hey, where do you get that indicator from? Where are you charting at? Okay. Click through all those links. If you don't find it, then I could give you an answer. But I provided all of the links and all of the resources in the Discord. It's free. There's no stipulations. You don't have to. It's not free like every other crypto Discord where you have to fucking use a ref link to gain access. It's free. I created the Discord because I got tired of answering questions. And honestly, I figured I could dedicate an afternoon to filling this thing with all the things that people always ask me. And I'll be in there from time to time. And maybe it'll evolve into something else in the future. But I haven't exactly figured that out. So here we are. All right. Sound good? Temperature check. How do we feel about the market right now? Obviously, I'm going to get into my thoughts. But are we bullish? Are we bearish? And for those of you that are looking at that link, I posted that link before. Same with Phemex. It's a vanity link. So rather than having a crazy long ref link, Trade Bybit does take you to Bybit, but it does obviously it does connect you to that ref link, and then buy that entitles you to those bonuses. And there is a very large bonus for people who trade size, but I feel like most of the people right now are probably not going to be worried about that. All right, what do we got? All good, all good. Do you invest money for your little one? Everything I do with my money is now my little one's money, so that's how that works. Cautiously bullish until mid-March. All right, so the background noise is off, right? Get rid of that. Cautiously bullish and bullish till mid-March. All right, so a couple things. Looking at the S&P real quick. Do you think Lido finally breaks out? I'll look at questions in a second, but right now we're taking a look at the S&P. So big picture S&P, right? This is the benchmark for equity markets. We're looking at the S&P. This is the E-mini. Crypto has traded highly correlated to this, same as trading correlated to the NASDAQ, to the Russell. When this is performing well, when this is trending, right? When this is bullish, crypto benefits. There are periods where this is moving sideways, this is moving slightly down, and crypto showing signs of strength. I would be careful, and this is one of those times right now, assigning too much weight to things like BTC and alts showing signs of strength when legacy is looking a little bit slippery. In my experience, and this is, I think, something that you could see empirically, go back, look at all of the times where the S&P has kind of teetered, moved down a little, and crypto is showing signs of strength. In my opinion, it's never been decoupling. It is not a decoupling. So right now, the S&P is looking weak and Bitcoin is looking strong. Not a decoupling. A lot of the times, almost all of the times, it is honestly a beneficial lag that you have. So if the S&P is starting to nuke and Bitcoin hasn't and ETH hasn't, well, then you probably have a little bit of a head start to still take advantage of that correlation trade that is just at that moment lagging. You will not see the S&P move down a couple handles and Bitcoin remain flat. I don't think we're there. I don't think we're going to be there because crypto just trades like a tech ass. It just trades like a tech stock. There's periods of decorrelation where it's, there's idiosyncratic strength, but I think that is permissible when the waters in legacy markets are calm. And I'm saying this because yesterday, Bullard came out Bullard came out and said something along the lines of a 50 basis point hike, being on the table in March. Now, it's important to understand that Bullard is not a voter, right? So it's not like he's going to have a say, but him coming out and saying that yesterday was what took the S&P from here. All right, let me make sure I have my tools all set up. Took us from here to down here in an instant. And I think at the same time that happened, obviously Bitcoin, if we look at I'll put these two next to it. Well, I'll put one onto the overlay. 1 sec. New price scale. Basically, we're sitting at, for BTC, that was, let me get rid of this because I won't know the exact price. Oh, the scale was on the left. Never mind. Bitcoin was at, tapping at 25K. Bullard comes out and says that, knocks the ground out from underneath the market. S&P drops and BTC responds as well. So keep this in mind, because if there are any more hawkish updates by voting members, if we do get 50 basis points in March, not saying that that's going to happen, markets are still very sensitive to that, right? Markets are pricing in right now. You could see that the narrative is that things are going to come off sooner. Even though they keep saying higher for longer, things are going to come off sooner. Conditions are going to improve faster. So I think the market is getting kind of trapped in that area. It's not to say that this can't continue for a long time, but if there is anything to the contrary that's material, meaning there is something more than 25 basis points, then markets are going to be caught for a really nasty surprise. So keep that in mind. Weakness right now in the S&P that's not being translated into BTC. If it persists and the S&P was to continue down, then I think that there's no way that Bitcoin's going to hold up. So looking at the S&P, and I'll finish this real quick and we'll get to looking at BTC. And I'm going to take questions during the stream. A couple key things that I think are worth noting. So this box, this is a monthly range. So we're talking about the market it closed outside of this range one time going back to May. So we've been stuck within this monthly range, developing value between 42 and 37. So any kind of significant acceptance outside of that, if we close February through that, and again we have 11 days left in the month. So far it's not looking good. So far it's looking like a swing failure above this cluster. But acceptance through this level, right, would be a significant change in market structure. You could see that we had trouble right at that monthly level, and we've since rejected. We're outside of this running diagonal. But in my opinion, it pays to be cautious right now. If we look at just some of the key areas that stand out, these lows going back to January. This is January 31st. We're looking back at January 25th. Spent most of our time in this composite between 4170 and 4050 going back to the beginning of the month. Accepting outside of this composite, I think that you end up just targeting these lows. So the point is we're hugging the bottom of this structure now. I have to get better at these native drawing tools. How do I back these up? Oh, right here. I'm not using my other drawing tool because some odd reason it doesn't show up on the terminal. Not the terminal, the ExoCharts platform. So far right now, just kind of cage this. Value developed between 41 and 41.66. This is looking like we're starting to accept through the low. Again, kind of a pretty nasty remark yesterday that took us down here. But if we end up accepting below this, this consolidation, we just target these lows below 40, below 4,000 again. And I think that at that point, you see that Bitcoin catches up. So that is something that I'd definitely be mindful of. As far as recovery goes, I think that, you have this kind of gradual decline in this structure so far, right? So any kind of change back above that monthly level through that, so something like a sign of strength above 4180, then you could probably say that you're leaving all this behind, right? At that point, if this is back up here, maybe Bitcoin at that point is above 25. So moving along, just wanted to point that out. The dollar, I guess I should mention this as well, because we've mentioned this during the last two streams, which are going back now quite some time. Actually, earlier than that, because we were still on our way back down here. I think I started mentioning this in November and December. This is kind of a loose area, right? Kind of a loose area, so it's not exactly, trading to the point. But the idea was, after this correction, remaining overly bearish on the dollar just didn't make a whole lot of sense, because you can expect that since this is not like a fucking 5-minute chart or a weekly chart. This is a yearly chart. So we're looking at a yearly range that we broke through. So obviously very significant changes taking place in the last year. But needless to say, the move back down there, is not something that you just would take for granted as far as it giving up and letting us through. So any place where the dollar is going to find some kind of pushback, even if the dollar chops, considering this entire, in this environment, rather, we've seen that the dollar and the S&P, so equity index futures or just equity indices, have had an inverse relationship. It would make sense that if you're going to have chop in the dollar, you're going to have chop in the S&P, and that's never been something that's been very beneficial to other risk assets. So now we are sitting on the top of that structure. Now, something that I would say is, reasonable would be, honestly, if we lost this low now. So if the dollar's back below 100, that's probably the fight that we put up. But where it is right now, I wouldn't be too bold as far as long-term predictions go with crypto, as far as the trend moves upward, because I think this is an area where the dollar could possibly find support. And something to understand is that the dollar and equities haven't always had an inverse relationship. So in the last, I think it's the last year and a half, 2 years, right? The inverse relationship has been there. But there's been plenty of times where strong bull market, strong dollar hasn't been troubling, right? You could almost make the argument that, all right, so we have strong, United States markets, equity markets when we have a strong dollar, and that makes sense. Right now, there's an inverse relationship, and the more recent information is obviously more important to weigh when it comes to assigning weights to things and how significant they are. All right, so BTC. I haven't streamed in a while, so this is going to might be kind of redundant to people that look at the chart because it's quite obvious, but just marking out some of the key levels on this chart. So just weekly high and low to start this move, right? FTX breakdown, but we were within a range for multiple quarters at this point. Now that's your weekly level, and there's a bunch of confluence up there, obviously, between your daily as well. So daily highest close, weekly highest level. Again, this is just going back to June. Reasonable, it's not complicated, right? Reasonable to expect that this area would offer some pushback and this would be a significant resistance. Where do we bounce from? No matter how you cut it. So if you were to look at this from the high to low, if you were to look at it from the daily close level, right? So even if you're going down to this low, excuse me, that didn't register, right? Mid-range is almost in the exact same area, right? So whether you go based on daily levels, whether you go based on weekly levels, we bounce at an area where you could reasonably expect to bounce, right? This little pivot right here. Okay. So that doesn't necessarily mean that this is one and done and that this is, a higher low that's going to lead to continuation and you should just take 25K break for granted. I think personally, this is the most significant contextual level on the chart. I am happy to buy in if we're above this level and I'm chasing it and we're, clearly leaving it behind after establishing support above there and ideally struggling at the level. If we consolidate against this level and then we break through, I'd be much more inclined to buy that than, just one single presence above that occurred for just a matter of minutes. So this retest right around 21, again, mid-range retest of a prior pivot, daily level's already drawn, lowest daily level down there before that break. Honestly, I could go back to a few levels in this chart that would stand out as I would say things that bother me, but they're not obviously, it doesn't matter what my opinion is. We don't have to do anything according to me. Yearly opens down there. I mean, we'd have to travel a really long way at that point and be pretty ugly on the way down there. It wouldn't mean that, I mean, honestly, if we break below 20K, I think we have a problem. I was personally expecting that we would run through this gap and tap this low. But maybe people are just this aggressive about getting involved and picking this up. Now, listen, there is something to be said for us kind of carrying out a significant amount of the participants in this market, taking out a bunch of leverage, us kind of being at our low lows, the market being at emotional lows, being at structural lows. But still, I'm hedged up here now. I'm just focusing intraday, not trying to have a ton of long exposure, because I feel like this is the kind of thing where you kick yourself if you didn't take profit up here, right? There's nothing wrong with, honestly missing this. Let's say that 24.5 to 25 level. I mean, if that's the worst thing that happens when you're trading BTC, that you have to buy up here, rather than getting involved here on the assumption that it's going to break, then I don't know what to tell you, right? I don't want to write this level off. We're starting to see, hold on one sec. I'm going to change this up in a second and go to the TPO chart. We're starting to see a little bit more aggression when we look at, one sec, the futures market versus spot market. For most of the time, and this is just a chart of BTC prices across major exchanges. So for most of the time, it's been the case that Coinbase was trading at, prior to these little pumps, there was periods where in the correction, it was trading at a $30 to $40 premium. So Coinbase up here, top left, trading at a $30 to $40 premium compared to Bybit and compared to Binance Perps. Now, this was kind of hard to discern whether or not it was people getting trapped offside, selling or hedging, or this was during a time when there was stablecoin FUD. So this is the way I was thinking. And I didn't get really aggressive about buying the last dip. The stablecoin FUD could have been the reason why we saw that premium, right? People jumping out of stables, getting into spot BTC, getting exposure that way. And then you're going to see that window, that premium rather, between the basis between prices increase. I probably overthought it. Either way, in the past, a large discount between the perp markets, so futures markets, we're talking, in this case, front month, or if you're talking inverse perpetual swaps or the linear contracts, a large discount between those futures products and the spot market has been a good sign to start paying attention, at least for possibly the trend changing. So if we're in a pullback and you're starting to see that basis really widen, then if price is no longer moving and it starts to look like there's more work being done than actually is being rewarded. But the opposite is true now. We're starting to see that the futures market is trading more in line with the spot market. Again, not to overthink this, which is easy to do. When we start trending really strongly, it is going to be like that for some time, because people are going to want exposure to leverage. They're going to want to get more exposure on top of their spot exposure. So you have to have kind of an understanding of what the norms are for that relationship between the spot market and the futures market. Personally, when this occurs at resistance, when we see that there's, spot market is trading at a discount to the futures market, I don't like to overthink too many things and start doing the whole game theory thing and then start, trying to, again, really overqualify the setup. If we're at resistance and futures market's really aggressive, and then if we're not being rewarded with higher prices, then I don't know. It's honestly, sometimes it's a good time to short, but most of the time it's a good time to take profit. So this whole level right here between 25 and 30K, I think is ours for the taking if we could settle above, honestly, if we could settle above 25. Now, the reason for that is, I have a profile on this actually, but I want to put the yearly VWAP on this. Now, we haven't streamed in a while, so I am kind of touching on a lot more high time frame stuff than maybe normal. This is relatively unchallenged gap. So on the way down from the break of 28 down to, 24,207, 24.2, relatively unchallenged, right? So acceptance back within this gap, a lot of times, you take into consideration the time frame you're looking on for how patient you have to be. But more often than not, acceptance back into a gap, and you can kind of write it off that it's going to travel to the other side of the gap. The idea being there's probably a good amount of people that might have sold into this. There's no real clear invalidation into a gap. Like, you're not holding on to a position that goes against you after you sell into a gap or buy into a gap. If you do, you're fucking dumb. But the idea is it's unchallenged, right? So trading back through that, there's not a whole lot of resistance. It kind of behaves a little bit more like a vacuum on a low time frame, but on the high time frame, like I said, it just means that you have to wait longer for the actual, movement from point A to point B to occur. So above 20K, 25K, I think that it's reasonable to first tap 27. And then honestly, I would expect overthrow. Market's probably going to get pretty excited at that point. And more importantly, something that I just put on the chart, that puts us above the yearly VWAP. You can see we're kind of, if you extrapolate last year's VWAP, because this is a reset, if you extrapolate last year's VWAP forward, and this was just rolling from now moving forward, we would be hugging VWAP right now. So what that means is for the entirety of last year, this is the average point for where most of the volume was done. So consider it like a volume moving average, right? So if you are a seller and this is your average price, well, good for you. You've been below that level for quite some time. If we start to recover that level, it makes more of a case for obviously everyone who's sold below it being wrong. And if there's any positioning that is not stale and still exists, that they might be put, at that point, their feet to the fire. This on the low time frame is a little bit more reasonable to have that kind of assumption. Daily VWAP, we retake daily VWAP after a significant sell-off, or we, lose it after a significant markup. Well, intraday is a good case to be made for that positioning to still be fresh, tagged on. And, if you don't see the open interest change, then it's possible that the puke or the further move is still ahead of us. But all in all, high time frame, retaking that yearly VWAP, recovering that average price, I think it just adds more merit to this, showing, this having legs and moving further up. But again, this is all taking place at the most significant level on the chart, which we are hanging out below now. Failure up here. So I shorted twice this morning. I ended up closing out those shorts for my first short. I closed out for like $100 scalp. The second short, I shorted 3 times. I got stopped out at a move above, it was 24.3, and then I shorted again at like 24.150. Closed that out for another very small move, and it probably ended up eating more in fees than anything else. As it stands right now, possible higher low in the making, right? We're still within yesterday's range. Let me switch this up now. One sec. So this is yesterday's structure. We're within yesterday's range, but we're starting to move back into where the bulk of yesterday's activity occurred. I don't think you want to be a buyer unless we start retaking yesterday's POC. So that is right around yesterday's volume point of control, and TPO point of control is right around 24,586. So they're pretty mirrored in that sense. So something like, whoops. So one sec. So a tap of this level and then a failure would be completely ordinary for us to put in a lower high after returning to yesterday's point of control, and then ultimately re-accepting back outside of value. So another short setup, I should parse that sentence correctly. Another short setup would be ultimately if we move up to yesterday's POC. We're sitting within yesterday's value right now, and yesterday was the bulk of the distribution right here was pretty balanced. Obviously, we had this imbalanced portion right here, which we filled out today, which is something that you commonly see. But if we're putting an effort back towards yesterday's POC, we've tapped it now, and we start accepting back below this distribution. So that's right around, it's kind of right around where we are now. if we start putting in bearish market structure right there, I think that there is a reasonable short setup back to today's POC. So again, super myopic right now, just zoomed in. Because again, we are at high time frame, most significant contextual level, I think, on the chart locally. So I don't want to be taking any long-term positions, not keeping that in mind. It's kind of like the closer we get to this level, the more that we are swimming upstream if we're still looking for longs. Because the level is so close that, again, anything into that, this resistance can play out over time and still leave us with, a larger failure moving back down to mid-range. So we're putting in an effort. We're putting in an effort right now towards yesterday's POC at the underside of yesterday's value area low. Again, just where the low point of that distribution was. If we fail here and we start putting in bearish market structure, it looks like we're getting some open interest coming in behind this move. Long side and short side, I'm sure. But if we start breaking down and you don't see that unwound yet, I think that you're looking at a bigger spill. So some kind of series of lower highs right here, whatever you use to determine absorption and failure. And then we probably have a rotation back down to this POC right around 23.8. And then probably back down towards these lows, honestly, if we fail right here. If we end up retaking this POC and we're showing signs of strength back within yesterday's profile, I think you get the test of yesterday's high again. I don't know if you necessarily extend from that, the much larger break. But again, we've spent a really long period of time away from this range high, right? So chopping around here multiple times and then still being left with something like this wouldn't be abnormal. I think that you kind of have to, unless this thing just absolutely throttles this level and we're like, a couple hours from now after the stream, we're at 25.5 and, the market is just getting nuts. Unless that's the case, I think that it's reasonable to expect something that kind of chops around here. And then, this pivot right now is really well defined, right? So your 21.4, 21.3 level, if you lose that, right, then we're back mid-range. We're losing mid-range. A move that doesn't immediately show signs of, let me zoom in, one sec. A move that taps into this gap, that doesn't show immediate signs of recovery, is a move that probably moves, too many moves, moves pretty quickly and closes that gap out. It's what we've done almost every time. You have to hold the threshold. So this low right here, right around 20, it's more like 20,300 than 20,000. Even though I think 20,000 is, that key psychological level. If you don't get a very quick response here, a large stop run, a wick, a gappy spread blowout move, if you start spending time below 20,300, then I think that you're going to start looking back at the yearly open. But obviously we're not there right now. Right now we're holding the top side of this previous range, which is also something that is worth noting. It's a multi-day composite. It's going back to January. So do I think the fight at 25 is done? No, not necessarily. I think that it's reasonable to expect that we chop around up here. And if honestly, most bullish case to me would be us chopping around up here, respecting this mid-range, and then you're doing something more along the lines of like grinding up towards, one sec. I'm really trying to get better using the native drawing tools because that screen drawing tool just becomes a pain in the ass. If we end up, putting in another low, holding this level, and then we're kind of grinding upward and you see that, positive drift at 25, that's a judgment call where I might be buying resistance at that point. In general, I'd much rather see more development, taking other things into consideration as well, like the S&P. Again, if the S&P is going to lose what I think is ultimately today's low, I don't think we have much room to breathe below today's low. So you either got to get back within yesterday's range or kind of kiss this thing goodbye for a little bit. And I think that kind of precludes what ultimately becomes a longer period of sideways activity for BTC. Not hanging on to that though, right? Obviously, the minute that changes, I have to change my positioning, in my opinion. Couple things. It's the beginning of the year. I want to look at the questions in a sec, and then I'll take a look at alts. But since I posted this morning, some of those setups have been kind of wishy-washy. It's the beginning of the year, right? So if you started off this year strong, which should have been something that's relatively easy to do because January was good, February choppy, but been a really good move the last week. You have to think of the zero bound, right? You're starting off positive. You're playing with the house's money. You could afford to take a little bit more risk. Me personally, this is how I act, not you. On your A+ setups, right? Because again, you are playing with the house's money. Play with the money that you've obviously made, not necessarily adding more and starting to assume that the bull market is starting to kick off again. I think that's an unreasonable take. But it's different than if you started off the year in the red and you're trying to play catch up. So it's, needless to say, and this is not something that everyone can necessarily aspire to, or you can aspire to it, but you don't have the benefit of being in this position always. If you started off the year strong, you have some cushion, right? Whereas if you started off the year weak, you're trying to play catch up. And this is something that I made a point about this. It's rather similar to what I'm saying with relation to the S&P. The further out the S&P pushes from these technical levels, so from, for example, we got the move through here. If we continue to break up through that monthly level, the more we move up, sounds kind of tautological, the better off things will be. But there are asset managers and hedge fund managers and traders that have been sitting out now that have remained bearish this entire time. So it's really easy to get that feedback, sort of reflexive feedback loop going. If we start pushing through, this is the first failure through the level, right? So this is at that monthly level, the first move through that diagonal. So if this is the failure, then so far it's doing a good job. But if we start reclaiming 42, and now you have this in the rear view, if you're an asset manager and you're still sitting on your hands, the truth is that you won't have a job, or you probably lose your LPs at the end of the year. Because imagine if you remain sidelined, as the S&P is now up. If we go to the beginning of the year, the S&P is up. What's it up year to date? The S&P is up 4%. So if you imagine, standard I'll say a window of 8 to 13 for the last few years. Obviously outliers within that. Even if you bought treasuries, right, and if the S&P continues on its path, you've underperformed. Even though they've obviously seemed like such an attractive investment at this point with yields being so high. So that's something to think of. They are definitely sweating because the further we move up, the more that they have to chase. All right. Locally, all right, so we went over. Honestly, this is a one-day move up. Normal consolidations, we look at 3 to 4 days. So I would kind of expect that we could be playing out within this sort of 25 to, we'll say 23, 4 region for the next few days. I don't know if this is necessarily going to just roll over from here. We are, again, just taking local structure into consideration. We are retesting the top side of this range. If the S&P was looking really strong right now, then for me, this would be a no-brainer buy. And it sounded like buy. It just isn't the case right now. That might be a problem to take too much macro into consideration, but it's been the smart thing to do all year. There's like little periods where crypto outperforms. There's like some idiosyncratic flow, and like crypto Twitter traders will rag on people focusing on the macro. And it's like, who are you kidding? The entire year we've been at the mercy of yields and the dollar. So this one time, it's like landing a punch in the final round after getting your ass kicked, and that fighter's still standing up, right? It's not over, and you haven't thrown a knockout blow. So like, let's temper our emotions and expectations a little bit, and not talk so much shit about the macro. Because if the S&P was to take a dive and the dollar is going to move up, then there's absolutely no way that crypto is going to maintain its stance on top of this perch. All right, so I wanted to look at alts. So I'm back to using, because I'm using Bybit, so I'm using ExoCharts desktop again. So I have everything that I would normally have up. Trading Light made some upgrades, so I added this again. This is something that I don't really care too much for the heat map, but looking at some more of the granular order flow data across multiple pairs, that some of them aren't listed on ExoCharts. Coinalyze is a really nice platform, but it's kind of no frills, plain vanilla. I don't know. It's nice, but I'm not crazy about it. All right, so look at alts. It's my first stream back, so I might lose my place in my train of thought. Yeah, we're already back above that high. I wasn't even paying attention. So initial move above the high, you had some absorption up here, so you could see that there was some buying right above that high. 10 million trapped in the pocket. And then on that correction, I think this is today's VWAP down here. So there's a significant amount of selling. Where's the VWAP on this? Yeah. So those two pullbacks, retested VWAP, some of that positioning turning over. But right now, at 24,420, not bad, but not getting overly excited. 25K is resistance until it isn't. So I'll look at funding. Nothing crazy. Funding is kind of baseline. So we ended up coming down a little bit. So this move here, one sec, looked like a little bit of just profit taking, honestly. So we had the run up, we had the increase in open interest on the way up, but it's kind of just since reset to where it was during the prior range. All right, so just looking at this wipe and in that lead up, so in that range, open interest kind of down here. You had that spike up with this move. So for the first time, again, like I said, futures getting quite aggressive in that stop run. And then we kind of just wipe back down to what has been baseline for the entirety of the structure, up going till, this is going back to January 14th. So that positioning wiping and then price maintaining this level, you could always just see that come back in and help push us further up. All right, so some of the alts that, and this is since bounced, some of the alts that I'm looking at, this is kind of self-explanatory. The same concept for intraday, same concept that I apply when looking at TPO or any kind of profile. If the market has been really cleanly bracketing, right, and then on the high time frames, it's obviously it implies a much bigger transition. But if the market's been really cleanly bracketing, and this is like a 9-month long range, when we finally do accept out of that and fail to re-accept back within, this is a setup that I'd be really patient about, right? So the retest of this high, obviously the closer you get to that, the better, because we're going to chop towards this high. You're never going to just run and gun this. I mean, if you're in a thin alt, you will. But if this is something that people are bullish on and that has a future in crypto, and that this is the kind of bottom that's taken place, one, you could expect the move outside of this to take its time, but to have some kind of legs. So the first move is always going to be the most violent because you're going to be running stops. But then since it's a change of a monthly long structure, you could expect the transition out of it to take some time. So, in this case, we broke up from, it was like 268 and ended up almost doubling, which is a big move, right? We ended up closing this gap. But now, more importantly, DYDX is holding the top of the structure. So I think that at a minimum, you get a daily return or a return on the daily back to this high. And personally, if I'm looking at the structure, I think you get more than that. I think that we end up getting, okay, getting better at that. I think we end up getting at least a return back up to this level around 4, right? So that level where that line is right above this high. We've closed that gap so far. We're finding value within there, a level where we previously didn't establish value, moved down very quickly. Established 9-month long value down here between, between 90 cents and $2.60. So this break is meaningful. I think that you get an extension up to that $4 level. But my point is, this took a long time. A setup like this, you have to be patient with. And the idea is that your work is kind of cut out for you, though, when it comes to your invalidation. There's no reason why, if this setup is to play out, it should be back below this low, right? So that 250 level is an area where, if you're not already long, I mean, it's kind of a wide stop at this point. But that's your invalidation. For a long, sort of position trade type of setup. So that, I think, is going to chop as long as BTC chops. If BTC takes a cliff dive, then that will be troubled. But one sec. I hate the way this scales sometimes. But I think that this is something you can be patient with. Someone said it, believe what you want about the quality of the exchange. Everything that's happened recently should make you bullish on decentralized exchanges. Now, the problem with DYDX or fucking DYDX, whatever you say, is that this announcement today by CZ that they could possibly stop business relationships with United States-based protocols and crypto companies, that's troubling because even though DYDX is not, I'm self-conscious about saying certain tickers because I've been here for like 6 or 7 years now, and I realize constantly that I've been saying things one way in my head, and people are either saying them out or sounding them out. So I went to lunch the other day with a friend, and he's a trader as well, and I've been saying DYDX, or no, I've been saying DYDX, and he said DYDX, and I started questioning myself. But anyway, what was I saying? The problem is that I think the developers and the protocol is it is a United States-based protocol. So that's troubling. The problem with that is, aside from being blatantly obvious, is that, for anyone who needs explaining, crypto is having trouble in the United States. So if Binance is not going to be like the refuge for crypto outside of the United States, leading exchange and whatnot, then that's troubling, right? They're the number one exchange by volume, by open interest. So if you're not on the best venue and you're not allowed on one, hemisphere of the globe, or just, one continent total, because there's obviously countries that you could trade that are in this hemisphere, then there's kind of an issue. Hook. So there's a couple reasons why I'm bullish on Hook, and that's all contingent right now on holding this 237 level, honestly, because you had a daily engulfing structure. Not engulfing, but this is a pretty ugly red day, even though also really thin. You can't assign too much to their movements intraday. One sec. If the market maintains strength, if BTC is above 25K, fresh charts, right? It's an effect. It's a psychological thing, a fresh chart. So it looks like it has no price history. So if you're an optimistic person, which everybody in crypto seems to be overly optimistic, you're looking at this as just being able to move up from here, right? So a fresh chart goes a long way. Now, what you have to know is that a fresh chart can have legs for quite some time. So if BTC is over 25K, this is making a new all-time high. This could probably easily double before having any kind of major correction. The other ugly part of a fresh chart is you'll never see a chart that starts like this and just continues up and then settles. In the history of crypto, I don't think that that's been the case unless you go back like to early listings, that are already years in the rear view. But I said this whenever, during the bull market when people were getting really excited about Radium and Serum and even Solana, obviously, was that all of this bullish structure, the people that are involved early, they could sell regardless of price, right? So they're not price sensitive at all. So if the market was to correct down to $1 in hook and you're looking at a chart and you're just applying just like a technical framework, you're thinking, well, this is the bottom, right? This is the low. This is the opening price, depending on what exchange you're looking at. Obviously, there is a low on a different exchange that might not be reflected here. But you might be sort of doing that thing where it's the same effect of honestly framing things on a chart, right? Looks like a ceiling, looks like a floor because it's close to the margins. The point is, though, that if there are insiders, right, there are people that are already up 100x that can sell if this drops 50%, and it doesn't really matter, right? Because they're already up, 1,000x, 100x. So you have people that are not sensitive to price movements and can still sell all the way down. And those are who you're facing if you're a new buyer. So almost all of these structures that are new, they end up looking like on the weekly, it might look like this and look sick. That's a colloquialism here, at least, meaning awesome. But then they end up doing this for months, or at least a couple months, right? They go through a reaccumulation phase. And that transition is almost inevitable. So be mindful. Like I think that, personally, if you're an investor, you haven't seen like the reaccumulation period yet. Just to put this in perspective, there's been 3 bars in the monthly chart, right? So almost everything has a good period in the beginning like that, right? Where it looks great in the beginning. And these are some really old pairs, so it might not necessarily be the case with those, but then goes through that inevitable major correction below the opening price, below the listing price, and then gets reaccumulated. So my focus on hook is only in the short term. Magic 1 inch. 1 inch is setting up for a possible daily engulfing. So certain setups like this, if you have this kind of reversal, you have to check the stats on it, but there's usually a really good short-term trade on the table if you have this kind of reversal, right? So daily engulfing candle, I'll say just, you have to double check this. You're probably getting at least, you're at least getting another green day to follow. So if you have this, if you close through yesterday's high, we're looking at, this is 1 inch. So let me just frame this in 2 ways because this is also high time frame wise looking good. Intraday setup, daily engulfing, you're probably looking at another green day that follows 8 times out of 10, we'll say, and returns back to that daily highest close. So it's important to compile stats, obviously, right? I have a guy who he's very helpful when it comes to stats. We'll call him my quant when it comes to BTC. So knowing these things matters, right? If you have a daily on BTC that's 8 to 10%, 90% of the time you're looking at continuation. After the first low of the day is put in, right? You could almost expect that you're always going to get a green day, especially if it's through a level, right? The idea of understanding norms and multi-standard deviation moves, and if there's continuation to follow them or if not. So this would be a daily engulfing on 1 inch. I just noticed that when I opened this chart, but high time frame wise, 1 inch is finding a base in this prior floor. So if you look at all the alts across the board right now, they've put in this pattern, right? They've taken their time, put in this pattern. We've had this consolidation, and then we've got extension. So 1 inch, honestly, again, like I said, taking its time, but this looks good. Same thing can be said with Mana, which kind of looks like Filecoin did before Filecoin's pop. Now, Filecoin had its own catalyst, Filecoin FVM, but look at this chart on Mana, Decentraland, right? Metaverse. And then look at Filecoin. So pre-breakout. So you have this reacceptance back below what was, a multi-quarter long monthly, multi-quarter long range low. Deviation, failed to continue, reaccept. Now, this is not a clean range where, it's clean highs that are respected the entire time. This is a series of lower highs. But basic range trading, if you have a range, and the same thing if it occurs at the high or the low, whether you accept through the low or you accept through the high, failure here and reacceptance back within, and 9 times out of 10, you're looking at least the midpoint of the range to be retested. So this high being taken, and then, extension back up to the range high. Again, like I said, this is not a range like BTC was or like some of the other alts where, you had multiple highs at the same level, multiple lows at the same level. We hugged for a long time on a lot of things, but not everything had multiple tests of the initial high. So Mana is something that looks a little bit more than remotely similar to it. Right, so one sec. No, that's waves. Here's Mana. So we had a move below these lows, retest that level. Again, very significant contextual level. Strong daily move so far. We're back within, we're within yesterday's range. Yesterday was a really ugly rejection. But this looks good. This honestly looks good. I think that as long as these lows hold, right? And the benefit of this kind of structure is your invalidations are so close, right? Don't put a whole lot of thought into them. Don't get, too tied into them or too attached to them. This is your invalidation. There's no reason for it to be back below there. If this is going to remain bullish, it should start floating back towards this high. And then there's not a whole lot that stands in the way because you have a series of marginally higher highs on the way up. So marginally higher highs, if this isn't stale, when it's local, you run those stops and you get a big move. This is ultimately a pretty clean range. So if we're back above like 80 cents for Mana, I think that you're going to get that extension above $1. And that's kind of like a Hundy roll setup anyway. Hundy roll, you're approaching $1, you're approaching 100, you're approaching 10. You never stop at exactly that point, even though those are kind of like shelling points, and you kind of want to front run shelling points, areas where the market agrees without necessarily explicitly saying that those are areas that are, focal points or areas to sell or buy. But yeah, Mana looks good. Waves, I thought looked decent. Basic range stuff. High time frame, same thing, kind of consolidating against a prior range low. I don't know enough about this fundamentally though, but what I've seen across the board is that even garbage is pumping. So algo, this is something that I did notice high time frame. We have a lot of similarity between the last low. So market, history doesn't repeat, but it often does rhyme. The same people that are trading back here, trading here, same behaviors, same animal spirits, two completely different contexts. So this is, with QE, and this is not with QE. So it is a big deal that there is a significant shift that occurred in trading environments. But look at the bottom, right? As far as algo goes, as far as everything goes, it's all vaporware, right? It's all vaporware. This kind of rounded bottom, spike, loss of market structure, instead of continuing down to new lows, hugging it, right? So a trap setup, somewhat similar to over here, right? Spike up, loss, no immediate continuation, hugging that level. What are the odds that this does something like this again? I would say that it doesn't honestly need, we need BTC to remain strong. We need, ETH to remain strong For alts, as long as those things move sideways, these can still transition because it's not like it takes a lot to move these. These are not treasuries, right? It doesn't take hundreds of billions of dollars to move these things, or even billions of dollars. It just takes a few market makers to step out of the way, toxic flow to come in, and at that point, spreads widen enough for this thing to move really fast and far. So algo is something that I think is worth keeping an eye on for that reason. Listen, this market is one where dumb shit works, right? So spotting a fractal at the beginning of a period where the market is hot, right? So you have to know what kind of environment or regime you're in. In January, it was a breakout trader's regime, right? I mean, you could trade it all different ways you wanted, but you were rewarded for buying breakouts. When that regime changes, if you're just a one-trick pony, you're kind of fucked. So if we're in a still, if the market is going to remain strong, this is something I want to keep an eye on. Because honestly, like I said, this is something that has worked. I forgot my point originally. I tried to secretly get back to it. I was struggling mentally for a second. But if in the beginning of January, if you noticed pairs that were trading similarly, structurally at least, you catalyst aside, narratives are all created here. You notice how the market goes from thinking that everything's going to zero to suddenly like we're starting to focus on things that are, news releases and fundamentals, and it's all garbage, right? When prices are higher, people feel better, right? They start looking under the hood and things, they start justifying why they're buying them. But it moves because there's more buyers than sellers, right? Or there's more sellers trapped and there's just a little bit of buyers that come in. So if you're able to spot the fractal, right, that is taking place across pairs, honestly, it's something that's been actionable, right? Okay, this chart looks exactly like this one. They're both garbage, okay? They've been correlated in the past. There might be a lead lag play. So I think that is something on the high time frame that stands out. Lastly, I'll look at the chat. Blur. From what I've seen, and this is from someone who did the research, and I can't really say that it's 100% because I didn't do it myself. Most of the airdrop has been sold. All right. Now, there's obviously people that are, part of the project that hold a significant amount. But, when it comes to the airdrop or everyday retail users, from what it looks like, most of it was sold. So in the beginning, there was only a spot market. Now, you could say that's good. You could say it's bad because honestly, you want people to bet against this for it to have those, ridiculous squeezes. But the entire way up for Blur. So let's see if Blur is, it's probably not on. One sec. Funding. Once perps came out, it looked like people started hedging this, right? So open interest is up still and has just been going up. So I'm wondering if after the introduction of perps, you're having people that are hedging. Maybe there's, I don't know. Listen, is there some kind of staking mechanism? Is there a reason to hedge, to hold on to the spot rather than sell it? But this is something that I don't think is done moving yet. Again, same thing as Hook. I think that this is going to have a really nasty correction. But you can see in the initial move, funding has since come down. And if we look at like aggregated CVD, yeah, you could see like this entire move looks like futures have been just fading and hedging on the way up. So yeah, is there inevitable correction that's going to come? Yes. But do I think that there's a short squeeze in here? I think so. And honestly, from a market structure standpoint, it's not like there's much on the daily. Like This is our daily highest close up to this point. You know, we're through it now. But I think these little levels are worth boxing out. Right, so a move that takes us through back above $1. You know, $1 is kind of it's an inflection point, right? I had mentioned down when I bought down here that $1 would be a shelling point. I'd probably take a little bit of profit before then, but we would most likely overthrow. You know, we overthrew all the way up to $1.20. So getting back above $1, I think you have this little area of balance breakout. And I think that we're at least looking at a retest of that all-time high so far. And again, I think that because perps are introduced now, you do have people that are coming in and shorting this because, yeah, this is inevitably going to majorly correct. And maybe that one short, maybe that's just GCR building a large short because he has enough margin to hold on to this thing. But I think that this has some gas in it. Now, would I have to change my opinion? Yeah, if we're back below this range, back below yesterday's low, which is this red line, then this could panic out real quick, right? Because it is new, and everyone does know that these things end up correcting majorly. Looks like Bitcoin is back outside of yesterday's value. Yeah. Not like not a whole lot of aggression above that. Both sides getting pretty active. But like I said, if we end up failing at this level, now failure would look something, you know, is this the beginning of failure? Possibly, but I think failure ends up looking like starting to lose one of these local lows. You know, on the way up, we ended up holding after these, you know, after these corrections. And if, you know, price tends to have a rhythm to it, right? So if you see that each pullback is roughly, you know, this is twice, this is half the pullback that was. But if you see there's sort of a cadence or rhythm to price, at least you know what is possibly noise and what is actually significant change. So if we end up pulling back and we start correcting lower and breaking back below that structure that we made on the way up, well, then that's a sign of change, right? Because we've put in so far higher highs and higher lows. So if you do get something like that, maybe a possible backside short after failure around this level. Again, something that would probably return back to today's POC. So today was really choppy because it was Opex. So your Opex is the third Friday. So we're 1, 2, 3, third Friday of the month. So that's obviously, that's options expiry and legacy markets. Yeah, let's see if we get that set up. Like I said, for this move, you have, it looks like on the long side, just looking at Binance futures. So notice that, so spot CVD is, no, excuse me, CVD is going up, right? Open interest moving up, but we're starting to see that depth begin to shift. So whereas this is dip buying here, you know, your order book, the ratio of bids to asks at that level is much stronger on the bid side. It's beginning to lose that pressure as we move up. So if you start to see that this is beginning to flip and we're starting to see a lot more heaviness on the ask side, that CVD is moving up, funding is remaining positive, and open interest is going up, you know, that's on its own, you could run those sellers over, right? That doesn't mean that it's necessarily just a short. But if you see that and then price is showing weakness and it's losing momentum and beginning to lose some local levels, then I think it's a good short. you know, today's VWAP might be a good area to define this because we've so far managed to hold it successfully on the way up. So today's VWAP is where's our VWAP? Maybe that VWAP is, oh, is this? I don't know why the VWAPs are looking different on this chart. Yeah, this is probably a little bit more accurate because it's taking into consideration the actual volume a little bit more than TradingView. I don't know, could be wrong. Does anyone have any other questions? Oh, let me go back a little bit. Hey, what's up, Mercury? Sorry, man, I didn't see your comment. Let's see. Cornholio, what's up, buddy? Yeah, sorry, guys. I didn't really look at the comments. Yeah, Pracker, you're absolutely right. Those gamma effects work both ways. And those zero day expiries in Legacy are really popular, not just by retail, honestly. So that obviously leads to option writers and market makers hedging. So if you buy a call, they buy the indices, or buy the index. It's obviously more elaborate than that, but it means that they're long gamma or short gamma, excuse me, that when people are buying options, they're buying calls, they have to buy into that. So they end up fueling really violent moves. And the opposite, if people are buying puts, they have to sell into that to cover it. So it just kind of exacerbates what's actually already taking place. They're adding fuel to the fire versus keeping the market pinned. Huh. CZ said it was false. All right. Doge. Doge hasn't been doing really much at all, and I think there's good reason for that. Doge is one, it's really big. It's heavy. So it's, what's the market cap of Doge? It's multi-billions, right? It's up there. So it costs a lot to move Doge. Another thing is I think Doge is a good retail barometer. And I don't think we have any new retail in the market right now. And maybe Doge doesn't continue to be that because, I mean, it's getting a little old at this point. So Doge is a good retail barometer. It doesn't look like we have any kind of crazy retail flows right now. It looks like it's just the market, people that were in the market that were sidelined coming back into the market. So I don't know. Doge hasn't been something that I think was worth focusing on. Floki obviously has. I don't know if people notice this. I pointed this out, and this is one of the reasons that I longed Floki kind of last minute in bed, honestly. When Elon shared a picture of the Shiba Inu dog, so when Elon tweets, if he tweets something about Doge, maybe there's a picture he tweets of the dog, there are going to be bots that pick up on that right away, right? So your news traders, your more sophisticated algorithmic traders, they're going to be bots that trade on that information right away. So Doge, right? A lot of the interpretation is immediately, it's translated into that being, that last one was translated into it being something for Doge. But what people and bots can't realize is that the page that the dog was filling in upside down said Floki. So there's a little bit of a lag in how responsive the market was to this, which was a really great lag to be able to take advantage of. But Doge doesn't look interesting right now. So CFX is something that I'm kicking myself over because I was long CFX. So if you guys remember, maybe like a week ago, I was long CFX back here, closing it out, and I never got back in. And this happens all the time, so you just got to get used to it. I looked at this the other day, and I saw us just minorly reclaiming this low. So going back to just why, most of the time I'm going to take a setup like this. So you have a breakdown, again, take out that pivot, no major continuation in an area where there shouldn't be much trouble to continue, right? This is kind of a gap. It's not a whole lot stands in the way from a structural standpoint, right? Pretty vacant. So instead of continuing, you have basically just a swing failure. Take that out, trap sellers, right? I ended up selling back here, fucking expecting that this was just going to grind and pop up. So a lot of times you get structures like that. There's like this pattern where it looks like, momentum's dying, but it's going to squeeze up much higher. So I thought that was what I was going to get. And then I looked at this reclaim and I just didn't pull the trigger. And then there was some news. This was, again, something more fundamental. It's not like this has to mean that fundamentally it's a sound investment, but it's one of those things where news traders are going to really send this thing. And this ripped. And now I can't touch it. So. Yeah, we're going into the weekend. So what that means is there's obviously no legacy correlation we're going to be trading. So do the markets pump over the weekend? Yeah, possibly. Is this just mean reversion after a nasty sell-off? It's too early to tell. I mean, we're right around that 50 point. So we'll see. Probably going to wrap it up though, guys. I think I've been going on for just over an hour now. I mean, overall, so just to sum everything up, I am not big picture bearish on Bitcoin. I just won't be caught buying a resistance like this. And yeah, like I said in the beginning, that might mean that I end up buying back in at 25,500. When changes like that occur, though, I don't spend any time thinking about it, which means that maybe we get a move to a level that I perceive as being the level, and then that level gets, that level breaks down, and then I get stopped out there. But I'd be much happier to do that, to get stopped out, than to buy into that resistance right now. If we end up getting to that, getting to the end of the day, it's 4 o'clock, it's 5 o'clock futures, and legacy closes out. There's no major risk at all that's present. Not like there's major risk right now, right? It's not exactly falling anymore. But if all of that is off and Bitcoin is holding and consolidating against that level, at that point, I could make a judgment call. But we'll see. But I think that wraps it up, guys. So thank you for tuning in. If you're interested, if you're on Bybit right now and you want to, you could still take advantage of that bonus, right? So if you want to create a new account and take advantage of that $100 bonus, there's obviously much larger bonuses if you deposit more, but there's nothing wrong with that. So if any of you have used my old link in the past, just reach out to me if you don't get the bonus if you make the switch. And yeah, I think that covers it. So that's tradebybit.com. And I'm happily working with them now. Some people are weird about traders partnering with exchanges, and it's so dumb. It's so dumb, right? It's not like it's a ton of work. It's really not work at all. If you trust the exchange, it's nice, right? You get to work with something. You're already trading on these exchanges. Why are we going to suddenly treat them like they're evil things? There is something to be said about proper risk management and protecting your funds and not being too exposed, because there always is a little bit, not a little bit, there's always a risk, right? Because FTX, look what happened to FTX. But listen, do athletes have endorsements? Absolutely. That's like, did Was Derek Jeter suddenly not a good baseball player because he got signed by Nike to share Nike once in a while? No. So anyway, everyone have a fantastic weekend. I will figure out the next day that I want to go live, and I will update you on Twitter.